Hello everyone, welcome to TradexBulls. Before going ahead, please pause the video and read the disclaimer. Also, if you haven't joined our Telegram channel yet, then please go ahead and join our Telegram channel, the link for which is in the description down below. We also have a daily session where we interact with our members, answering all their queries. So coming to today's video, we will be discussing about Nifty, Bank Nifty, and few other sectors. With the panic selling going on, this would be the right topic to discuss. We would see where Nifty and Bank Nifty is headed to, and also look at some of the sectors which could potentially do well given the current situation. Okay, so let's get started with our video. We'll start with Nifty first. So in our video a couple of weeks back where we had posted about a sectoral analysis, it was posted on 14th of November, the day on which Nifty was near 18,140 levels. So even in that video, we had mentioned that the structure of Nifty is bearish because it started making lower highs and lower lows. And we'd mentioned any up move would only start above 18,300, and a break below 17,600 would confirm that the short-term structure for Nifty will be completely bearish. So after that, it's been 2 weeks, and like you can see, Nifty has broken the 17,600 support as well, and it did bounce from 17,200, and then on Friday it gave a big downfall. So probably heading towards the next support. So this is where Nifty is placed right now. It's completely forming a lower high and a lower low structure. There's a trend line support which is also been broken here at this level. So what will Nifty do next? Okay, so what is the possibility of movement in Nifty? Nifty currently is at 17,020 levels. Could be a good chance of a big gap down opening tomorrow. And this is the level that we'll have to watch out for this particular moment. 16,730 to 16,750 levels is where Nifty also has a small gap which needs to be filled. And this is a level from where we can expect some sort of a bounce upwards. Bear in mind, any bounce from here will not mean that the structure has become bullish, but just a mere bounce where you can use the bounce to sell. So it's basically a sell on rise market at the moment. And if it does break this with all the corona news going around, all the panic setting in, if it happens to break 16,700 levels on closing basis, then Nifty would be heading towards 16,300 and probably around 16,150 levels, where there is again a small gap which needs to be filled. So there's been a lot of talking about Nifty going to 13,000 and 14,000. Let's not fall prey to just rumors, but the chart tells you everything along with what the FIIs have been doing. So they've been selling heavily on cash, which means there is no chance for a sustained up move. And when FIIs keep selling, the options data also is bearish, and along with the chart which shows a very bearish structure. So there could be a possible reverse, a support and a bounce from 16,800 levels. But again, if this is broken, then we would be staring down at 16,300 or about 1,600 levels. There are multiple supports below this zone where it could again come back to this level and bounce. So I don't think we should be looking anything below these levels at this point of time. So once a price-based correction is done, we could probably have a time-based correction, and then Nifty would start moving upwards. So it also gave a HNS breakdown here. Nifty at these levels, it gave a breakdown here. The target for this would also mean 1,000-point fall from this level, right? So from 17,600 levels or 17,700 levels, 1,000-point fall would mean that it would come to 16,600 levels. So at this level, you also have the gap filling, and you also have the target completion for the head and shoulder structure. So bearish structure, sell on rise at the movement, but Let's not talk about levels where we think it's a crash. It's a correction. It's a very, very healthy correction. And we'll just have to work with the levels at the support regions and added dips. Right. So that's with Nifty. Bank Nifty, again, when we had posted the video, it was around 38,500 levels. We also mentioned that there was a crucial support here. It had to break this trend line for any sort of up move. It did not happen. It was following a parallel channel pattern at this structure. It was very important for this to be held on. It did give a breakdown from here. And this was a level for which Bank Nifty had to hold for any short-term up move. It did not. It gave a breakdown. It did the retest, and then it is a continuation downwards. So Bank Nifty is also looking obviously very, very bearish at this moment. Bank Nifty will have to reverse and actually pull up Nifty, given the fact that Bank Nifty has underperformed even after the COVID pullback. So these are the levels we would be looking at in Bank Nifty. It is near 35,000, 36,000 levels. So there would be support somewhere around the 35,300 and 35,200 levels, but this would be a crucial level where we have to watch out the 34,700 and 70 levels, 750 levels. So Bank Nifty, again, you could see that it is also making a higher lower high and a lower low structure. The fall is more steeper in Bank Nifty compared to Nifty, but again, it has to break above this level and trade for any sort of up move, which does not seem likely at this moment. So Bank Nifty, again, your major banking stocks are also looking weak at this moment, barring just one or two. So we'll have to wait for a dip here again and see if it could probably reverse from this 35,300 levels, 35,200 to 35,300, if not from the 34,600 to 34,700 levels. So Bank Nifty also following Nifty and very weak at this point. The next sector that we'll be looking at is CNX IT. I think it is one of favorite sectors for retailers and FIs, just given the fact that it gave a huge one-way up move after last year's correction. So if you could see 35% one-way up move, and even in our video last week, we had a couple of weeks back, we had mentioned that I think any move in IT will not sustain until and unless it breaks this level and continues to go up. It is starting to consolidate by making lower highs. Okay, the lows are still fixed. It's bouncing off every time from this 34,300 zone. Again, it is going to come down to this zone tomorrow or probably this week. The question would be would it again bounce from these levels? So if it does break this level, then you could see a bigger fall in IT, which would also mean that your heavyweights such as TCS and Infosys will also be pulling it down. TCS is at very, very crucial support levels. A break from there would look very weak for TCS, which could also bring down the sector and even Nifty as well. So IT again doesn't look very, very strong. It's basically consolidating for the past, I think, for more than a month now. And given the one-way up move of 30% in the index, we would not be able to see a huge up move here. So IT is better to stay away from IT, given if you were a very short term or probably a swing trader, you can just use the pullbacks to trade and probably sell on rise if you're a swing trader. Next sector that we'll be looking at is probably the most important sector is pharma. So we all know that any talks with respect to COVID and any relation with respect to COVID and what market had done before, it was pharma which will start outperforming. So this is the area where we had made a video about on this day, and we had also mentioned that it was near good support levels and probably we could see a bounce from these levels. Probably exactly what has happened here. It moved down to this zone, but obviously held on to this support. It started giving a reversal. Even on Friday, when there was complete bloodbath, Pharma was the only sector which held and probably moved up by about 1.5%. So again, pharma sector and pharma stocks will be in radar. Just the fact that it's near support as well as news based, it could be the sector that you'll have to watch out for very short term, or if you're a swing trader. So opportunities in pharma would be plenty. There are good stocks which are at support levels. You have Cipla doing well, and Aura Pharma and Biocon. So these are stocks which you could probably look at for a short-term trade, and also look at it from a weekly perspective. Again, this is the zone where pharma really started to break out from. Okay, so this was in 2015, and then after 2015, it actually broke out this year in May, and then retested the support couple of times, and is still looking good because it hasn't given a closing below this support. So pharma is a good sector to look at, and some of the good stocks are Cipla, and probably Biocon, and you can even look at Aura Pharma and Lupin. Okay. The next sector that we'll be looking at is Realty. Realty in long term is highly bullish structure. It has come out of a huge consolidation breakout. If you could see from say about 2009. Okay, that's when it had tested this level, and I think it gave a breakout after 12 years, and is still holding on to levels. So from a long term, this is a structure that a sector that which you must definitely not miss. And even from short term, any pullbacks here is a very good a chance to add. Even if you look at it from a daily structure, a daily time frame chart, it gave a huge up move here, about 15% move in a couple of days, and then got rejected from these levels, again took support, then again rejected from the same levels, and is near support now. So probably breakdown from this support of 480 485 could bring this down to probably say 456 or 455, and probably even below till 435. But any dip here is a must buy for a medium or a long term investment, because there are a lot of stocks which will come back to the levels where it broke out from their multi-year time frames, and it'll be a very good chance to add. So again, stocks here that which you can watch out are probably TLF at dips. Godrej Property gave a huge move and it's just given a breakdown, so you could wait for a good pullback there. But the bigger stocks would be like India Bull Real Estate. Any dip till 155, 158, even till 145 is a very good chance to accumulate the stocks. There are very good reality stocks which can be added for medium to long term investment as well. And I think the last sector that we'll be looking at for today is Psu Banks. Again, Psu Banks, when we discussed last week in the video, a couple of weeks back in the video, it was probably trading at these levels, 2,900 levels. We clearly mentioned that a pullback till this level is the best zone to add, and within 2 weeks it has given a very strong pullback, and it's come back to the levels where it broke down from the inverse HNS structure. So any dip till the trend line breakout retest is a good chance to add here. Again, see PSU Banks for medium term will give you that bounce, and eventually the targets for medium term would be more than 3,460. So it would retest this and then again continue moving upwards to this level, and then would also try to move up and test this long term trend line, which is coming in PSU Bank from the past 10 years. So again, a good structure to add at dips, and probably you could look at stocks which are nearing support levels in PSU Banks, and a slow moving sector, but definitely if you have the patience to hold it from medium term to long term, you have very good stocks coming in. And you could also look at stocks which are currently residing at support. So use this fall to pick stocks which you had missed in the rally. The market is again giving you a chance to add back stocks. There is no reason to panic at this moment. Yes, a healthy correction from 18,600 levels was required, or it was pending for a long time. So market moved one way from, even if you don't consider it from the 8,000 levels, even from 12,000 to 18,000, it was a one-way move. So a pullback till 16,700 or 16,100, like we discussed, is possible. But that said, I think once it does have a price-based correction and then a time-based correction, we will be all set to keep moving higher. So so the strategy would be to accumulate stocks, good quality stocks at uh, proper your support levels, the levels where you can find the demand, and then probably accumulate it for medium term to long term. One stock that we could probably look at, even at this given condition, we look at the monthly time frame of a stock called Kopran. Kopran had tested these levels of 250 in the year 2000, say probably 99 and 2000, and then from 2000 to 2021, probably about 20 years, it was um, only trading in this range between, say, I think 5 or 7 rupees to about 90 rupees. So it then gave a breakout, huge movement from here. Whenever we have a structure like this, the target becomes the length of this box, and then it is also completed the target. But even on a monthly time frame, this is looking really good on a higher high, higher low pattern. And even with Fibonacci, the once these levels are taken off, 261, or even any dips till 226, even if it comes down here to retest 226 or 200 levels, if it manages to clear out this 260 levels on a weekly or a monthly time frame, this stock could clearly show more than 300, 350 levels, and it would move into uncharted territory, which means the stock will eventually gain a lot more strength to give you solid returns. So this is the level which needs to be cleared off on a monthly time frame for better results. So you could have Kopran in your radar for short to medium term as well. So that's it for this week. Hope you liked the video. Uh, Please like, share, and subscribe to our content if you like the videos. Until we meet you next time, thank you. Bye.